There's been a week of deafening silence from the banks, but late this afternoon, ANZ joined the Commonwealth in raising its variable rate mortgage above the RBA. Deposit rates are also up and mortgage exit fees will go. But with households already feeling the squeeze, highlighted by a drop in consumer confidence this month, it puts the banking sector squarely back in focus. Here's Emily Stewart.
It's beginning to feel a lot like Christmas, but retailers feel the Reserve Bank has already put a dampener on festivities. Economists are warning the rise in interest rates could mean a repeat of the lacklustre spending seen last year.
In the bike industry, Christmas is one of the peaks, and it's a time we look forward to maybe reaping some rewards, but this year it's just a case of survival.
Whether it's Myer or whether it's small or big retailers, it doesn't matter. We're all going to find it pretty tough now because of this interest rate rise.
A Westpac report has found consumers are likely to spend cautiously leading up to Christmas, with consumer sentiment falling by 5% since October. And a third of respondents say they plan to spend less on presents than last year.
So I think there will be less money to go around, but they'll just make wise choices in how they spend it.
Economists say the high Australian dollar has partially offset the negative impact of the rate hike in terms of consumer spending, and it's given retailers who buy imported products a boost.
We import from all over the world, or I'm a retailer, so I get it from our wholesalers, obviously, who do the importing. But certainly with the American dollar the way it is at the moment, that has helped us as retailers because that has brought down some of our purchasing prices.
But has negatively impacted on some businesses.
Because a lot of purchases or high-end purchases are now done overseas, people are finding that those products are cheaper, and they're bypassing the GST by doing so as well.
Westpac's chief economist, Bill Evans, doesn't think the Commonwealth Bank's rise above the reserve has affected consumer confidence.
And so I think we'll find a second round of falls in December once we see the decisions of the other banks. So to me, it's sort of half an instalment on a fall that's probably going to be closer to double digits.
But a rise in interest rates is expected to impact on the housing market, which has been subdued in recent months. Official figures show the number of owner-occupied houses financed in September was up just over 1% on August figures, and the total value of investment housing fell 1.4% or $95 million compared with the previous month. And now the ANZ has become the next bank to raise rates, increasing its variable mortgage interest rate by 0.39% to 7.8%. They've also abolished exit fees. Meanwhile, the Australian Securities and Investment Commission has established guidelines for early termination fees. The chairman, Tony Delezio, says the law limits these fees to the recovery of a lender's loss caused by the early termination. Lenders cannot use exit fees to discourage a borrower from switching their loan or to punish them for doing so. The board of the Reserve Bank meets in early December, and retailers and consumers alike are hoping they won't have any more unwanted interest rate surprises in store.